TheoTrade. This is Don Kaufman, June 5th, 2024. Just about 45 minutes left inside today's trading session. The S&Ps, they are ripping right now to the upside, up to the tune of about 1%, but it's all about the NASDAQ, and even more specifically, it's Nvidia. And Nvidia is the single largest stock risk in market history. Yes, it's official, and I am actually going to explain exactly how to trade Nvidia. Let's get right down to business here. Of course, on this evening's update, as I was saying moments ago, the S&Ps are ripping to the upside, but look, this is not some obscure area that the S&Ps are going to. If we cruise over to the SPX, the mother of all products, take a look where we're trading to right now. I'm going to zoom in on this. For those of you that do tune into some of these evening videos that I do, the weekend update, this Wednesday update, or into TheoTrade chat on a day-to-day basis, well, I speak just incessantly about expected move, and well, we're home. Look, I'm actually going to bring this to a 1 day, 1 minute, and what you guys are looking at right now is just that. It's expected move. Okay, this week in the SPX, and that's the product that we're starting off with here inside of the SPX. We did really nothing on Monday and Tuesday. You can see this central line. I'm kind of drawing a line on it. That's where the week officially started. And the expected move this week, and again, the expected moves have the option marketplace handicaps risk. The expected move was plus 62 or minus 62. And here we are right now. Took off to the upside this morning, hit the upper edge of the expected move, and here we are just outside that expected move. Like, don't be surprised at this point to see some pullbacks to the expected move, in of course the next couple of trading sessions. That expected move specific in the SPX 53.39. Again, I want to be very clear. That's 53.39, but that is SPX. Now, in a larger sense, look, it's not so much about the S&Ps. It's not so much about, well, let's take a look at the financials for an instance. Okay, what are the financials doing this week? Watch, I'm going to apply auto expected moves just to give you a feel. This is interesting to say the least. You realize that the financials this week hit the lower edge of their expected move on both Monday, Tuesday, and this morning, Wednesday. We've lifted very, very slightly. So the financials are nowhere to be seen in the equation of the S&P is rocking to the upside. Moreover, if we take a look at the energy sector, recognize it has smashed outside the lower edge of the expected move. And the reason I'm bringing this up is because in the weekend update, I was talking about just wild divergences in this marketplace. And those divergences continue. I mean, you need only look specifically at the Dow. All right, and the Dow is up, 0.3%. The Russell also has been rather divergent, but the Russell turned around and rallied today, much actually to my surprise. Nevertheless, if you take a look at the Russell, we'll go to the IWM in this case, go to auto expected moves. Yeah, it actually, again, hit the lower edge of the expected move this week and has rebounded. It is still down on the week. It's just absolutely shocking, if you will, to see major indices. These are huge index products that are either flat, like the Dow is basically flat on the week, or like the Russell, which is down, or different sectors like the financials, which are lower edge of the expected move, the energy sector outside the expected move, and yet the market is still incredibly resilient, which brings me to the point of it's not just tech right now. It's not tech, okay? It's single stock risk. I mean, in Nvidia, look, Nvidia is unequivocally, right, and hands down by far and away the biggest single stock risk to the S&P 500 ever. And if you look at it, and of course people are going to be, well, the market capitalization, of course everybody's going to look at the market cap, right? Market cap actually clipped 3 trillion today. Now, how does that compare, of course, to Apple? Apple, okay, is neck and neck with it. So there's no discernible difference, right, in terms of market cap between Apple and Nvidia. Then you take a look over at Microsoft. Well, Microsoft's still king, Don. It's absolutely not. Because if you take a look at Microsoft, and I've made this point in the past, Microsoft has about a 20% implied volatility. And we're going to use the volatility that's about 30 days out. You with me? There you go. Volatility 30 days out. And it's actually under 20%. If we actually take a look at Apple's volatility, all right, in terms of Apple volatility here, 30 days out, you're looking at about a 22 vol. Okay. Meanwhile, Nvidia, 30 days out, you're looking at approximately a 47 vol. So let's just call it double. It's really closer to 2.5 times the implied volatility. But if you looked at market capitalization, right, $3 trillion. And you looked at Microsoft, you look at Apple, and of course you look at Nvidia, and but you volatility weighted those. You realize Nvidia is acting, if you will, closer to like a $7 trillion stock, even beyond that, versus something like a Microsoft or an Apple. And we're getting to this point where you're getting, there's the difference between what we call systematic risk and systemic risk. I believe that Nvidia is actually calling, it should be called, systematic risk to the marketplace, which is almost like a domino effect. If you see Nvidia come down, you're going to see the S&Ps come off hard and fast. Obviously, the NASDAQ at this point is just downright, it is owned by Nvidia. But at the exact same time that I'm saying this, okay, and again, I don't want to go too far into it because yes, there's single stock risk, but then a lot of people are like, well, but let's do this, man. Let's actually trade it to some degree. Look, I guess if you can't beat them, join them, right? So I'm going to show you a way that, of course, you can execute upon an idea in Nvidia. Now, you could do this both bullish or bearish. I want to be very, very clear, bullish or bearish, because I make no two ways about this. I look at Nvidia and I'm like, do I really want to be part of this now? Okay, especially before it's about to go for a 10 for, one split over here, yada, yada, yada. That's not really going to impact it too much. Look, when I do trades like this, I like to use Tasty, okay? And the type of trade I'm going to do here is what's going to be called a catapult, okay? And what a catapult basically is I'm going to use the S&P options on futures, okay? I'm going to sell an S&P option on future to finance my Nvidia trade. You go, what? Yeah, why do I do that? I'm going to tell you exactly why I do that, okay? I do it because this is what all the trading firms are effectively doing. Trading firms are using a tactic called dispersion. And dispersion is going out and selling premium in like the SPX. We're using the ES options and futures. And the reason I use the options and futures is, okay, it's pretty minimal margin. And there's an entire, service that we built, here specifically for Catapult. But I'll give you a quick idea. All right, just brief and dirty. All right, here it comes. So I'm going 117 days out, 117 days out. And yes, I'm using the bigger ES. I could also use the micros, but in this case, go big or go home. So I'm actually going to go out and I'm going to sell a call, 59.50 call. And in doing so, the 59.50 call, let's say, is trading for 10.50. Now, for those of you that don't know that, okay, in the S&P options and futures, if you sell, okay, these 59.50 calls. So I'm going to write that up here. I'm going to sell, okay, the 59.50 call. And I'm going to sell that, okay, and the total credit I'm going to bring in right down here, okay, let's call it just about $500. It's actually slightly more than that, right? Slightly more than $500. And it's going to reduce a little bit of margin. So let's not get crazy, but it is going to reduce a little bit of margin. So I'm going to sell that for $500. But my intention, my intention is to only collect, okay, about 50% of that 500. That's my intention. Okay, now moving on. That is what's going to finance. That's the financier of the trade. Okay, then we're going to cruise over to Nvidia. Nvidia, I'm going to go about 72 days out. Okay, 72 days out. And Nvidia's got some funky strikes. But if you wanted to get bullish in Nvidia, okay, here you go. Lock it down. This is a $10 wide spread. And the $10 wide spread is currently trading for what? For $2. So I can go out and I can actually buy this spread for approximately $200. All right, so net, I'm into the trade, obviously, after I sell some premium, pay $200 for the spread. Now I'm paying $2 for a spread, but that spread can be worth as much as $10. All I have to do is hold it for the next 72 days. If it's bullish, it's bullish. And this is how I would elect to actually trade it. In fact, I got a bunch of trades on very, very similar to that right now. I got trades on, I'm using the micros against Google, against Microsoft, against XLF, and I always get accused of you're being bearish, okay? Actually, and ironically, I'm bullish in all three of these trades, both Google, Microsoft, and XLF. Sorry, all three of these trades, I am bullish in those. And it's a very effective means, if you will. Catapult is a very effective means, okay, if you want to get in there and you wanted to get bullish in it. Meanwhile, if you wanted to get bearish, yeah, you could actually do the opposing trade, okay? But you don't necessarily have to do it in Nvidia. You want to get a little bearish? Let's get crazy. Maybe you do it over in Microsoft, okay? Create an entire compilation of these types of trades. Look, the remainder of this week, okay? I mean, again, I don't mind saying this. The week, it belongs to Nvidia. Nvidia owns this marketplace right now. And if you look at Nvidia in the last, you got about 30 minutes, just over 35 minutes to go to the cash close. There's a little bit of sell side activity in here. The second that you see some sell side activity in here, okay, you're going to feel it resonate directly into the S&Ps. There's nothing else really driving markets. It's not financials. We just went through that. It's definitely not the energy sector. We went through that. All right. Tesla's nowhere to be found. All right. Oh, you got me. It's Netflix. Netflix is a meager market cap, not going to do anything. Okay. Yeah, you got some Amazon up to the tune of 1%, a side order of Microsoft. Microsoft's got a good bid, but Microsoft is, still pretty far away from its all-time high. It's Nvidia's marketplace at this point. And that's why I'm telling you, it is, okay, the single largest risk in market history. But at the same time, if you're going to trade it effectively. Use Catapult. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.